name is Shishir Gupta. I'm the founder and CEO of StartupLanes. Welcome to the demo day of Zappfresh. We have the founder of Zappfresh, Dipanshu Manchanda, with us. Hi, Dipanshu.
Thank you so much for sparing time to come and join us here. Thank you, Shishir. It has been a pleasure interacting with your team. So I'll give you a little brief on my journey and then also about how we started and what we are doing today. So I am based in Delhi NCR. I completed my master's and started working with Amex. And initial few years, I realized I'm more entrepreneurial in nature. I started my first venture in 2009, which was in education. And then, from education, I worked in healthcare and fintech. Last was with MobiKwik, where I was leading their strategy. And during, the MobiKwik days in 2014, I was looking at the sector around me in the food tech side. And we figured out there is no disruption happening in the food space. Everybody was looking to do something in the aggregation side of it and convenience, but nothing was really happening on disrupting the status quo of the food industry per se on a physical food side of it. And while interacting with Dalbinder, founder of Grofers, I found out meat as a category was posing a lot of challenges for them, where they were not really able to build an effective supply chain for their customers, and convenience was not really, being tied up properly for them, where the local butchers are not treating them right. So he started sharing his business problems overall, how critical the meat sector is for grocery, and what all is broken in the space. And that led me to get more curious, and we started doing more digging in the space, and found that the convenience part is also missing, and the supply chain is broken, where whenever you need to buy a particular product, most of the time it is not available, or if it is available, the quality is in question. So trust was a factor where customers were not happy buying from these local stores. And just the idea of getting a trusted brand coming to them and not giving them what they want was really making them excited. So our confidence grew day by day, and we started getting more sense on the sector. And during that time only, we started understanding the supply chain. And what we realized was that we can't really buy directly from the mediators and the agents and aggregators. We have to go to the source, because the local mandi is where the challenges are. And I'm going to show you what challenges are there in the mandi side. And then from there, as we were brainstorming on the idea and validating, we came together to start in Delhi first, and then move to other cities. I actually founded Licious. Licious was my brainchild. I partnered with other guys to get on board on the project, but we had a fallout, so we had to start separately. And we started in 2015 in Gurgaon, from a small apartment. It's been 7 years. We just completed last week. And what you see on the screen is how the product looks. This is a vacuum packed product in a box, and we have chicken, mutton, fish ready to eat, all these products. Jumping onto the size of the industry and in terms of how we are doing it. So overall, 1.3 billion people in the country, 70% are non-vegetarians. We are catering to the tier 1 cities, and mainly high disposable income is the TG, which is about 15% of the population. That comes to about 150 million people, which are the sector is growing at about 15% annual. India is also one of the largest in meat exports, but irony is that the domestic consumption and domestic production is really in bad shape. So we wanted to change this status quo. It is a large problem to solve and a huge opportunity in front of us. Now, the existing meat supply ecosystem, as you can see, exists of two offline people. One is butchers, local butchers, and then the other is hypermarkets and supermarkets. So what we have seen in the local butchers is that first of all, they don't follow any level of quality checks with respect to the breed of the chicken and the feed which has been given. So they're very at a surface level, buy only from these wholesalers and agents and mediators. Inability to basically fix quality is what a major challenge with butchers. The other biggest challenge is the local, inadequate cold chain infrastructure. It's a perishable product. It has a shelf life of 3 days. It needs to be controlled in a proper temperature in order to contain the nutrients and quality shelf life of the product. But we don't see that. Even in the local mandis, people are cutting on the floor, and it's a very, very unhygienic way of slaughtering. And what we found was that even sick animals were slaughtered and consumed, where people are not aware of what is really being consumed and what they're buying. So that's a huge gap. And the hypermarkets and supermarkets are also mainly glorified butchers. They don't go back to the source. There is very limited control and expertise on product handling. So both these options, according to us, were not really cutting the whole quality piece. Then we look at the broad ecosystem here. There is one side unorganized players, which are in thousands. We have few integrators like Al-Kabir, Saguna, Godrej Agrovet, Venky's. Then we have large retailers who are doing online plus offline. These are more Spencer's or our supermarkets and hypermarkets, which are, again, as I said, limited to expertise in quality, and range is also limited. Then we have regional players, like Green Chick Chop in Delhi, Prabhat in Mumbai, Five Star Chicken in Bangalore. So similarly, there are offline setups which are regional in nature, which do a mix of fresh and frozen. It's not, completely fresh what they sell. The penetration and the assortment of products is also limited. Availability is the biggest challenge. And whereas if you see players like us, we are focusing highly on quality, direct to consumer, solving an experience, for the overall customer in the space. Doing a direct, competition analysis with some of our peers, we are basically high return, low investment and high return, and other people are looking at high burn and low returns in terms of profitability. They've raised about $200 to $300 million till date. We have raised about $6 million till date. We are doing about 6 crores monthly in Delhi NCR as compared to 10 to 12 crores of Licious and about 7 to 8 crores of Fresh to Home. Major differences in the supply chain, where we buy directly from the farmers, whereas they rely on integrators and aggregators. Hence, that makes their cost of purchase higher, eventually them charging high cost to the customer, and having lack of transparency in the pricing also. For example, we are not charging any minimum order. There is no hidden charges in terms of packaging and all of those things, whereas other people, Licious and Fresh to Home, both are charging all these costs because they're not able to get the right cost in terms of purchase. And that is how I'm going to explain you how we are doing at the back end. So overall, we are halal certified, chemical free, freshness is guaranteed, and there are 0 preservatives which are used to keep the product fresh. There is 2-hour delivery slots which we sell the products at. Focus is on hygiene, and each product is delivered within 24 hours of slaughtering. Currently, the presence is in NCR, where we have 1 processing unit and then 8 distribution hubs in spread out in NCR, which caters to the last mile deliveries. The model is farm to fork, which provides complete transparency in source, quality of meat at different stages using technology. Overall, we have about 40 to 50,000 transacting customers on a monthly basis. We are doing about 100,000 monthly transactions. Then each customer purchases about 2.5 times a month. Average order value is about 600 rupees. Monthly repeat rate is about 90%. We operate at a contribution margin of 17%. CAC is 520 rupees, and monthly retention is about 90 to 92% as we are moving. We have seen a number of customers have jumped 4x, coupled with 6x increase in number of orders, especially in the last 2 years post-COVID. From FY18, as you can see, we were having about 10,000 monthly customers, which has risen to almost 40,000 customers per month. And in terms of number of orders, it has grown from 14,000 to 80,000 per month in FY21. Overall, the investment highlight is that there is an experienced management at the top level. With respect to marketing and branding, we have extensive marketing campaigns which we run across different formats. Technology wise, we are state of the art tech in terms of predicting demand, and also looking at launching new technology initiatives like basically able to check quality just by clicking a picture. That's a new thing in the industry. Nobody's doing that. We are working on that. There's a pilot going on. I'm going to explain you how that works. Then the model is completely farm to fork and tech enabled, and the infrastructure with respect to IT, procurement, all is digitized. And the range of products is about 70 SKUs, right from chicken, mutton, seafood, exotic meats, ready to eat, ready to cook, cold cuts. So approximately catering to each category of meat. We don't do pork, we don't do beef. Now, what is the farm to fork model? What we do is we work directly with the farmers who are breeding chickens. We look at vetting them, qualifying them, and evaluating them based on about 30 to 40 quality parameters. And once they're verified and evaluated, we buy live stock, which is the live bird. That live bird is transported to a slaughterhouse, which is a third-party slaughterhouse, which does slaughtering on our behalf. And then once the product is ready, it gets dispatched to our processing unit in Gurgaon. In this chain, there is a lot of mediators currently involved. So when we skip all the mediators and we have broken the process into two pieces, one is buying directly from the farmers and then slaughtering at a spare capacity of a slaughterhouse. So this gives us a bump of about 6 to 8% of the margin. And then once the product is in our control, we do quality checks at our processing unit, and from there it goes to the distribution hubs directly in a temperature controlled environment. Overall, a farm to fork direct to home setup gives us a consistent quality and high margin in the process, and also in terms of optimization. Infrastructure at a vendor and farm level is very critical to us. These are some of the checklists which we follow in terms to see how high quality the product is, in terms of cross contamination, biohazards. All of these checks and balances are evaluated by our food quality team in-house. In total, we have about 35 vendors, comprising of chicken, mutton, seafood, all of those. Our processing center basically follows a temperature control throughout the value chain. We check temperature every 4 hours. We look at the size, color, hygiene of individuals who are packaging. So entire process is very hygienic and safe for the product. Now, the fulfillment to ensure customer delight is, as you can see in the chart, there is a bird which is getting sourced from the farms, moves to a processing unit, which is a slaughterhouse, and then it comes to us, and then we do further quality checks and goes to the dispatch to the delivery hubs. In terms of marketing, we do offline and online. In offline, we do residential RW activations, market activations where we do sampling activities. And for online, we do mainly discovery through Instagram, and Google is what gets us in terms of the overall marketing. Current average marketing and branding spend is about 10 to 12% of the revenue. This is some of our communication and branding which we are doing. We've been covered by media fairly well, and we've also got various awards in marketing and other areas. In terms of the management profile, I have with me Surinder, who leads the operations. He's a supply chain professional. He looks at entire value chain, and he has a extensive experience in F&B. Then we have food and quality control supply chain, which is Srinivas. Priya manages our branding and marketing, and then IT is managed by Utkarsh and Puneet in finance. The future strategy for us is to achieve a 400 crore revenue top line. Currently, we are doing about 70 crores ARR. And this number we are aiming to achieve in the next 3 to 4 years. How we will do it is expanding a product and also expansion to new cities. That is going to be the focus for us. What are the products and how we are going to cater to it? So we are looking at catering to each meal type. So right from breakfast to dinner to occasionals, each meal type will have the product assortment. For breakfast, we have, for example, cold cuts, and for lunch, we have products which are curry cuts and raw products like fish. And for snacks, we have ready-to-eat products which are heat and eat products. And for dinner, again, we have curry products. We'll be launching more value-added products in the ready-to-cook, ready-to-eat, and also exotic range, along with accompaniments like seasonings, dips, and pickles, which will complement the raw product line. The next strategy, as I stated, will be to launch new cities as we are in between closing our $10 million round. This will be for gaining more momentum on a top line and making each city profitable in the 18 months is how we are doing it. Next FY23, we are looking to launch 2 cities in 12 months, which is Mumbai and Hyderabad. And after that, we'll be launching all the other remaining cities. Each city requires one central processing unit, which does the quality check, packaging, grading, sorting. And then from there, it goes to the distribution hubs, which will be about 15 in each city. So by the end of FY25, we'll be looking at 90 distribution hubs and approximately 6 processing units catering in 10 cities. How do we start a new city? For us, it's very important to understand the consumer behavior in that city, right from how many consumers are buying online to how many are consuming non-veg at home. After we understand that, we start looking for a place. It takes about 2 to 3 months for us to set up the infrastructure, hire a local team, set up a sourcing network, build delivery hubs, etc., and then move towards building and launching in the next 4 to 6 months, and then optimizing it in the 12-month period overall. Then we look at partnerships with gyms. We look at activations with players like Swiggy's to give us a kickstart in all these new cities. Currently, we are live on more Amazon, Swiggy, Zepto, Flipkart. Big Bazaar is not there anymore, but we were there. How do we build customer engagement is by enabling social commerce. As we go forward, we would be looking at launching a cookout videos for all our customers who will be able to upload videos on our app. From that, people will be able to look at all the products which are being cooked and used and be able to buy and check out right from that app itself. So it is more of for engagement, which we are planning. It's a live streaming of recipes. In terms of financials, we have grown about 50% on an annual basis from FY17 to FY21. B2C sales has jumped after COVID. We've seen a significant amount of increase in that. In terms of net sales, we are looking at doing about 400 crores by FY25, and this is how the growth trajectory is predicted. In terms of fundraise, we've raised about $6 million till date. 21% is with SIDBI. They invested $3 million. Remaining came from angels and family offices like Amit Burman from Dabur and other clutch of angel investors. I own 42% as of date, and we are in between closing a $10 million growth capital. We are in advanced stages with a couple of guys. So hopefully we'll be closing that soon. Thank you so much. Open for questions. In case if anybody wants me to go back to a particular screen, please let me know.
So talking about the finances of Zappfresh, they are really promising. They are really performing very well. This valuation method, the fair share valuation method, has been derived by our CC sir. There are 9 methods that have been accepted globally, and this is the 10th method, which sir has been designed, and this has been accepted globally as well. Looking about the valuation that we have been derived out of is 157 crores. So the industry has, sir has been told it is the meat and seafood. The valuation has been derived by the 26 parameters that have been laid down. So I will just give you a gist of the parameters. This is the overview of the industry. So anyone who has been interested to move ahead could get this report. So these are some of the parameters that we take under consideration before valuing any startups, and I guess these are the benchmark parameters and basis which makes an startup very well financially. So they have been patent registered under their brand, so that makes it very good to establish and brand better. The founder has a great experience, as you know, he has been shared, and that makes it very good to perform in the long run. The scalability, currently they have been operating in Delhi NCR, but they have they could be scaled all over the India. So the both price and convenience are being disruption very well. So the internal management and the service that they are providing due to the right from the first step to the to you get to they deliver to the consumer is very nice. So the market size is very huge. So there is a huge possibility to earn a fortune out of this market, and Zappfresh is doing very well. There are a few competitors, but as Sir has been shown the pros and cons. Zappfresh is being very good with technology, very good with the service that they have been providing. There is a 15% growth, market growth annually, which is the base growth that we have been predicting. It could be higher as more of the demand has been coming out of the market. The revenue projection for the next year is around 90 crores, and I hope looking at the financials, Zappfresh is going to achieve more than that. The past revenue has been impressive, and they have covered around 60 crores. The last year they have achieved around 50 crores of revenue. Profitability they achieve is around 16 to 17%. That is really handsome amount of profit that they are getting. Risk factors are very few. There are very new partners, players coming in the market. But I guess Zappfresh, there is not much more risk factor other than that. The profitability could be having a higher growth in the coming years. The distribution channels are D2C. Economical scale. So they provide a wide range of products. If you go to their website, there is a bunch of products that are very promising, and the fresh meat and the process that they go through is something that makes them very stand out. And this is something that you should look at. So the in-house process of that consists the quality check. You have seen the side of how they have been taking the management, how the step-by-step process has been taken, and they consider to do the quality check. And hygiene is the main concern when we look at when the food industry, and they are very good at looking the hygiene, and they take all the precautions before delivering. So they have an in-house development team, like they are making research and development for the ready-to-eat products that they have. So brand is accepted very highly in the Delhi NCR region, and I hope it could be the same in the other states that they are planning to. So talking about the brand establishment, digital presence is very good. The ratings are 4.1 in any social media handle. They have a good decent numbers of followers. The marketing they are doing, the campaigns they are running are absolutely awesome. So these are the CAC that we already said. The retention rate is very high. There are 90% of the repeat orders that they are getting, and these are only the repeat orders that they are getting currently in the NCR region. So if when they are going to expand, this is the retention rate is going to be same what we have been seeing. The management capabilities are very that what makes the company very firm. The fundamentals are strong. They have a decades of experience in the consumer tech business. So the tech side is very good. The management side is very good. They have certain amounts of current assets and liabilities. So this is how we are able to evaluate the valuation. So that's it from my side. Thank you for your time.
Thank you for the pitch, Tejas. And now if the Panshu sir wants, he can come up and explain the projection, and then we can open up the platform for questions.
Yeah, so projections for us for this year is doing about 90 crores. Currently, we are doing a 70 crore revenue top line, which is gross. Focus is on fundamentals for the last 3 years, and as I stated that we are a profitable venture, and we have been. So we're getting a lot of interest now, considering the markets have become more profitable, and startups are looking for all of that. And for us, the important piece is to sustain and grow, profitably, and that's how we are conducting ourselves. So that's, and then we are also at a term sheet stage for a $10 million check, as I stated, which will give us more fuel to launch new cities. And as we launch new cities, we are aiming to be profitable in each new market within a specified period of about 14 to 16 months. So that's how we are envisioning our growth. And as I mentioned, that we would be looking at becoming a 400 to 500 crore brand in the next 3 to 4 years. The market size actually is very big. So we believe that each metro city has a potential of 150 to 200 crore overall revenues for each brand in the sector.
All right. Thank you, Dipanshu. Now we can take up the questions.
Hey, hi, Dipanshu.
Hi, how are you, sir?
Good afternoon or good morning. Yeah. So my question is in the valuation. I'm not sure if Shishir would be answering that question or you would be answering. But in the valuation details that we have shown, we have mentioned that in all the social media handles, the rating is shown as kind of 4.5. But if I look at the Google reviews, it is showing 3.2. And the reviews that are mentioned there, those are not really good. So do you have any say on that?
Sada, this is a regular thing with all the consumer brands. Most of the time, agencies are managing these reviews, and that is how they are processed. So for us, reviews, are important, but we generally also look at what the business is, because we see a lot of spam happening, a lot of fake reviews also keep happening. So it's just an industry, peril of the industry, where you have a brand and people will say different things, and then agencies manage those reviews. So it's just a process which keeps going up and down.
Okay, so we are saying that in reality our reviews are good, but maybe it's someone's strategy to put the company down.
That's usually what happens most of the time, where we have competitors also. There's a lot of small players, and so that's how it is.
Okay, sure. Thank you.
Thank you, sir. Next, we have Mr. Erna Munden. Sir, please come forward and ask your question.
Yeah, hi Dipanshu, for the nice presentation. So you have a brilliant deck, and then delivery was also amazing. But Dipanshu, I am a rather little curious to understand about your fundraising, because a few months ago, I think this deal came to me through our venture, and you guys have done something through them also.
Right.
And then I think yesterday when I received Sisi's mail, so I was a little curious that they have closed a deal, around very recently, and then again they are doing this. So do you feel that because there's a lot of cash burn which is happening in the business, and your business is like that? I mean, whoever operates in this segment, for whatever, Lysias, Fresh to Home, you guys, I mean, the cash burn is very high, all of us know. And so do you feel that because the cash burn is very high, so you have to get do this fundraising very often? So that's part A of the question. The part B is this round. How much, what is the runway? So what you are looking at, and then what is your tentative plan to go for the next round of fundraise? So the question has two parts. Maybe they're interlinked. You can answer.
So Arnab, we are not burning. That is the actually a main difference with us and some of the other competitors. Our monthly burn is about 10 to 12 lakhs a month, and this has been there for last 12 months. So we have not raised a lot of capital, even in the last interaction with whoever we've done. We've raised a very small amount. So now that is precisely one of the reasons that we are raising, and it's part of the same round. And the second question is in terms of investments for us are important to grow the business, not to grow the burn. That's not how we are operating. The plan to fund, for our next fundraise, as I stated, we are at a term sheet stage already, for a $10 million check with one investor. And then there are a couple of funds also who have shown a lot of interest. So we would be closing with one of these guys in the next 1 to 2 months maximum. We'll be signing the term sheet. And that's broadly what I hope I answered your question.
So Dipanshu, only thing is the runway. So this round will give you runway for how many months?
This will be for at least 1.5 years to 2 years.
Okay, thanks, Dipanshu.
First of all, a very good presentation, because I really like the business model and stuff.
Thank you.
One thing is, you told you're raising a $10 million fund, right? And why angels again is the question. So as you have a lot of money, right, already?
No, so see, this round generally takes time. So with institution rounds, it takes 5-6 months to close. So this is a filler of a round. And angels, we already have angels, and we've been raising from angels. So that's something which we thought it's the right way to do to create more growth opportunity for the business till the time we close the transaction. Because there may be other offers which may come our way, and we keep evaluating. So time is what we want to have on our side, and also the other side is to keep continuing the growth of the business as we move forward. For that we need capital. That's the reason.
Another question is, what's your tentative plan like in phase 2 or like Mumbai and Hyderabad, right? So by when do you think you'll be actually establishing your timeline? So within 3 months, 4 months?
So see, the bigger transaction for us, I'm assuming will take 5 to 6 months to close, to money in the bank, etc. And then the first 12 months we would be launching Mumbai and Hyderabad, and the next 12 months we will be launching Bangalore and Chennai, and the third year we'll be launching all the smaller cities around that. So in 3 years the focus will be to launch new markets and make them profitable.
And last question, how are you going to provide an exit plan to the current investor? Like if I invest in this now, what could be my future exit plan?
So I mean, see, exit plans for us is a strategic investment. Today what we've seen is that even ITC of the worlds are getting in, and a lot of strategic food guys are looking to invest. So we believe that exits will be fairly easy. If we want to look at any kind of a strategic buyout, or look at any strategic investor coming and buying some angels. So that is one easy route to exit for us.
I mean, for the angels as of now. So for us, like not for the company as a whole, for the angels, like if I'm investing, so what will be my exit plans for the next couple of years if I would want to exit out of the business?
See, as I stated that, whenever we raise a round of capital, there is always some of the other secondary happens along with that. Because once we have primary capital in, there is a lot of interest which happens in the network itself, where people want to, buy more shares, or new investors who want to buy some secondary shares. Because once we have a larger round, we'll not be able to take any primary from angels. So the only opportunity for anybody new is to buy secondaries and not able to invest in primary. So my view is that next 2 years, if you want an exit, there'll be options to sell it to an institution, or if not, there'll be angels who will be also available to buy secondary, because primary option will not be there.
Done. Thank you so much.
So let me share one example with Vasant. We did a demo day of a startup called Crip Media. Experiential ETC is the name. And that we did in November. Investors who have invested recently, just few days ago, they've got an exit at 50% appreciation, 6 months. So, and how this exit happened? This is happening through the next round of funding. The incoming investor is offering 50% appreciation to the existing angel investors, and most of the investors are taking an exit. So next round of funding, definitely you get an opportunity because the valuation becomes high, and then you can sell off your equity to the incoming investors. Yeah, then we can move ahead.
Yeah. Founders just said that they're seeking a $10 million round. That's 75 crore rupees, 77 crore rupees rather, at 156 crore valuation. That dilutes everything by almost 33%. Already founders are diluted quite a bit.
No, sir. Sorry to interrupt. We are not raising at 157. This is only for StartupLanes. The valuation for 10 million is under negotiation right now, and this will be somewhere around in the range of 180 to 200. I can't comment on the valuation because this is still in negotiation discussion. But this 150, 157 is currently for this round for you guys.
All right. No, still coming back to the thing, even after the $10 million round, you're going to be quite diluted as founders. You will probably have very little stake. How are you going to keep your motivation going with the very little stake?
See, Vasant, to be very frank, motivation is not with the stakes. Motivation is to solve the larger, problem in the industry and disrupt the market and status quo and be, one of the leaders, for me at least. And it's very subjective, for everybody. For me, it's been 7 years. So we are not chasing money only. We are looking at value addition in the market. And D2C is a recent fad. We started D2C in 2015 when nobody was doing it. So we are futuristic in our vision. We believe that this category has immense potential, and it will keep growing in multifolds as we move forward. So our commitment is to the solution and the problem, rather than just looking at what is in for me. That's how I've been operating till date, and going forward also that will be my pure motivation.
Okay, thanks.
Next, we can take Anand.
Hi, thanks, Shishir. Hi, Dipanshu. Good presentation.
Thank you.
And an exciting business. I'm from the similar area, which is the foods area. So
Okay.
I have two basic questions. Once you expand to basically cities like Mumbai and Hyderabad, which is your next expansion. So first question is, what is incremental growth you are looking at from this expansion over your current business? Second, what is the confidence that you will be able to retain your profit margin or EBITDA in these towns, because these are new towns you are generating, and you are saying that you will need 14 to 16 months to become EBITDA positive in this. What is the confidence level? Because your model may undergo a slight change depending on the city and type of consumer and their behavior. Over to you.
Great question, Anand. So first of all, we have certain experience of one market, so we understand how market generally evolves. But we also understand the behavior in markets in India is very, very volatile and different in different cities. With a certain playbook in our mind, we have created assumptions of profitability and operational breaking even in these markets. What we have understood is we've actually done a fair amount of research. So it's the category is established to a certain level where there are players already operating in those markets which we will be entering. So we have data to assess and evaluate and then make a position in terms of how we envision this happening. We look at each market. For example, if we look at Mumbai, we would achieve breaking even in the 14 to 16 month period. And overall, in the first year of operation, once we have the funds with us, we would be accelerating 3 cities, which will be Bombay, Hyderabad, and existing Delhi NCR. So overall, we will be looking at a ARR of approximately 170 to 180 crores in the first 12 months. So and then gradually the revenue will improve as the markets become a little more mature. 2 factors are very important to understand behavior in our industry specifically. One is the internet penetration and consumers who are buying online, which is very high in southern cities. Hence, we have chosen Hyderabad as one of the markets. The other important piece is the consumption of meat, which is 95% again in southern markets. So these are some numbers which are very important for us to make some assumptions. And based on that, we understand the behavior and put the right strategy and action plan to adopt with a certain profitability and top line in mind. Specifically is what I'm saying is that the other markets are big enough. Behaviors in southern and western is more seafood oriented. Currently, our category contribution is of seafood is about 17%, which will move to at least 40% when we launch these new markets. This will increase our average order value and also will increase our profitability. So we will see different colors from these markets, but largely it's a very promising opportunity. Better than Delhi market is like what I can tell you, and other markets are very mature and ready for something like this as compared to where we are today.
Thanks.
All right, then can we take Deepak?
Hi, thank you. So my question is, and I'm sorry if you have answered this question before. I was away for a little time. So my question is, when was the last time you raised investment, and at what valuation, and what has been changed that you have reached at this valuation for this round? So just wanted to understand the rationale behind reaching at the current valuation from your last valuation.
See, last round valuation we did at 150 crore pre-money. This was with Kiritsu Forum and our ventures. We closed, and so this is about an year back, and that's broadly what it is. We have improved on our top line revenue and also on our bottom line. Our burn has been very, very low, Deepak. If you see, I think Tejas has done all the valuations in terms of numbers, so I think more appropriately he'll be able to help you with that. But about our last round is what I wanted to inform you about mainly.
Devanshu, a very good presentation. I am from Kochi, Kerala.
Okay, great.
Two things you have mentioned correctly. One about the South. One is the internet usage on e-commerce, and second is the use of non-vegetarian, especially meat in the South.
Right.
I was a little curious on how you will be maintaining the quality, especially you are mentioning that you are taking the help of vendors, or you'll be establishing your own centers, slaughter centers. But nowhere, even then, I am seeing that you are relying on human power, which is going to be a very great challenge.
We're launching a new technology, which you can see in the screen. There is a phone. You can click a picture of the meat. Your question is absolutely correct. What we are doing is automating quality check. So with this, what will happen is through artificial intelligence, we will be doing QC, where the certain level of images of the product will able to tell us how fresh the meat and seafood is.
Yeah, Devanshu, that is very good, because I am appreciating your presentation and the preparation to my question, even before you have prepared this. But a little more deeper, I am just thinking a little more deeper, because this is the second part, taking the pictures and going into AI. But I am more thinking about how you can do everything with the help of robotics, or you can avoid the meat, the fish that you have shown has been cut by human hands. That is one of the areas that we are very much concerned in the South, because we in the South the culture is we go to a person who cuts the meat and buys directly. But nowadays more and more concern is on the quality, especially in Kerala. We have a lot of problems in quality. So have you thought about using robotic hands or cobots to
robotic hands? I mean, I think this is slightly more away from what we envision. I think it is another 5 to 6 years away. What we do, I'll tell you in terms of quality, is that all our farms, there is no manual intervention in the breeding process. There is a automation at the feed dispensing, water dispensing, and major handling is all through. A lot of handling is without human intervention at the farm level. But and on the second level, when it is slaughtering happening, and see, fish is one part of it. Poultry is the largest consumption in the country, so I'm giving you that example mostly. The two checks, one is at a farm level, another is a slaughter level. At slaughtering, this is all done at automated slaughtering plants, where again the touching to the meat is minimal, because all of these things are done on machines. But when you say robotics, I haven't come across anything in robotics in the industry till date. But we are keeping our eye close on any new technology, to basically simplify and automate and safeguard quality in the matter. But for us, we do infra checks. We do what is the automation at the farm, at the slaughter level. makes us more confident of what we are buying overall. That's how we take comfort. And the image which I showed you, which was to where we will be enabling now customers at home to click a picture from their phone of the meat which they have received, and be able to depict how fresh the meat is. So that is also one of the very new initiatives which anybody will be taking in the industry, which nobody has till date. So we are very keenly looking at to bring more tech if we can, if it is available. And in case you have any suggestions or solutions, happy to look at those things.
Yeah, Dipansh, you are now more clear in terms of the slaughtering house process. I mean, you are using automated machines, which is very, that is a comfortable thought.
Sure.
Any investor. But some more, you can start thinking. Already started thinking. That's what I understand.
Yeah, absolutely. That's very critical for us.
Thought I can just throw across is, for example, if you take the meat, what are the feed that has been given, because AI can map all that and show the customers that in any stage of the growth of the meat, there is no poison or any unwanted things happening. In the case of fish, especially in the south, what we feel is there is a way of adding more ammonia so that it doesn't show decay. So
those checks are there. No, those checks are always done through third-party food labs. So those are something which is mentioned in my deck also, that everything which we sell is preservative free, chemical free. And those are the regular checks, which we have to do, which is part of our entire process. But I think specifically to your question of automating this process, where if it can be done through technology, it's a starting point with the picture, and the AI is what we are trying to do. And as we move forward, I'm pretty sure we would be looking at more advanced technology coming our way. When and what is the wait and watch. But right now we are doing our best in terms of using tech in quality check and also simplifying process overall in the supply chain.
So that's very clear. Thank you very much.
Thank you.
And wishing you the best.
Thank you.
Okay, next we have Mr. Ganesh Kumar. Sir, please come forward and ask your question.
Sure. Hey, Dipanshu.
Hi, Ganesh. How are you?
I'm good. Good presentation so far.
Thank you.
I have a question regarding the supply chain. Do you have any unique advantages over the entire supply chain in comparison with, let's say, Licious or a Fresh to Home? So why I'm asking this question is, I have recently attended one pitch from Bonsaro. So these guys are also in the same domain, and they have some unique advantage in terms of sourcing the seafood is concerned. So they are passing on that benefit to the customer so that the prices are competitive. So that way they have an edge there. I was just wondering if you have any of that.
Yeah. So we are doing the same thing. What we do is we have actually broken down the process of procurement. We buy directly from the farm. When you buy directly from the farm, the livestock cost is approximately, let's say, 80 rupees per bird. That 80 rupees per bird gets slaughtered, and then the consumable product comes to be about 900 grams. I'm giving an example in poultry because north is majority poultry, and as we move towards other cities which have more seafood, we will follow a similar format for bringing directly from the source. So that's the main difference. And the other players in our category, the Liciouses of the world, are not following that. Their whole focus is on buying from large integrators, and not really caring about the price and what they're charging, etc. Whereas we are very, very value driven, and that value comes from the supply chain differentiation, which is segregating the farm and the slaughter and liquidating the whole bird. So when we basically cut the whole bird, there are feathers, feet, livers, gizzards, all of those products which are unsold generally But what we do is we sell it to the slaughterhouse and set off our slaughtering cost. So overall, there is a saving of approximately 8 to 10%, approximately 8% in this format. And this benefit is forwarded to the customer in terms of lower price. How lower is about 7 to 8% from the competition. But even then, even if the price is low, we still make more margins. So that is how we are able to bring this value overall for the customer and for all the stakeholders at a profitable level.
So would you be able to replicate this model when you go pan-India? That's when will this model break at scale, or will it hold?
So no, it will not be, because I'll tell you, Delhi is the most chaotic and messiest of the market. We believe the ecosystem is more ready, prepared, more boostful in southern and the western markets. The infrastructure with respect to the number of slaughterhouses, the farmers, overall industry is far more mature. What is available in the NCR belt. So I believe that it's going to be easier for us to replicate this at the back end. We generally, what we do is we do vendor development programs where we work with our vendors to get to a certain stage and give us what we want. So there is a significant amount of effort which we have already put in, and going forward, we believe that it will be lesser needed in cities like Bangalore, Hyderabad and other cities, because there the quality quotient is already at a certain stage. Availability of infrastructure capacities are there, so we'll be able to harness those and also build a mid layer in the vendor base to make them come to the next level by giving us what we want. So it will be a nurturing process as we move forward. With a ready infrastructure available and more options available, it is easier to do, not difficult to do at scale.
Okay. So one final question. You mentioned that you were the founding member of Licious and you had a fallout. So would like to know more about what's your contribution and how has the fallout happened and how many days were you associated with them, etc.
So as I stated, the idea was mine. While I was looking at scouting, ideas in food, I connected with some of my old colleagues and friends, and one of the guy was the Abhay, and I got him on board on the idea. And then we started talking to other people in the network. They were all getting excited, and we formed a team to first launch in Delhi. But again, we then they said that okay, let's launch it in Bangalore. We said okay, Bangalore. So these guys basically were very, very funding oriented. They were not really making a profitable enterprise. They were making everything for the investors. And our approach was that the size of the market is so lucrative, profitability is good enough, so we should make a profitable enterprise and not just do what they're doing in terms of chasing valuations and all of those things, which was not really solving the problem. They have a laundry list on how they want to launch and how they want to do everything, and not really solving the problem. So that was the first disconnect. The second disconnect was that the founder was getting greedy in terms of the stake understanding. We had an understanding of certain equity arrangement which was falling every month, because he was getting more validation, he was getting more greedy, which was making me lose trust and in the person as a character, and then we had a fallout. So the overall period, we spent about 6 months together in bringing this together. Even Licious as the name was done by me, and I have all the proofs, Ganesh. I can share that with you. There's no point in going back to that, but it's just we believe that the industry is big enough for multiple players in the industry, and everybody makes a sense of the business in their own way. So for us, we believe in a long-term approach. We are still in the market standing. They had a help with one guy who was from a venture capital industry, Helion. He was the CFO there, so he knew how to raise capital, and they had their own benefits and advantages of what they did in Bangalore, which is great. But for us, what was important was solving the problem.
Hello, Mr. Dipanshu.
Hi, how are you?
I am good. Okay, so actually I have basically two questions. First question is, you said that your company is already profitable. I just want to know that last 3 years, how much revenue you have generated and how much profit you have made.
So we have done a net burn of about 1 to 7 crores in the last year, and we have done a gross revenue of approximately 60 crores. Previous year the burn was approximately 2.5 crores annually. I'll have to check these figures it's not on top of my mind.
It's
And
okay. You can give
overall
me just the props.
overall revenue was about 50 crores in last year. Previous to that year we were doing 35 crores in annual, and the burn was high. It was almost 10 to 12 crores previously, and then we brought it down, and the revenue has also gone up after COVID.
Okay. My second question is I'm from Bengal. Okay, I'm Bengali. So our main dish is basically fish. Okay, every day it is coming in the fish. And our basic habit for the almost all the families, like they go in the morning to buy the fresh fish from the market.
Right.
In that case, if you are doing delivery and all these things, how you bring those customer into Zappfresh? Why do you order them to you?
See, Hiddenmay, with due respect, we understand, each city has a certain behavior, and Calcutta, is not in our radar as of date. We are focusing on metro cities. Our TG has a certain expectation and a problem which we are focused towards. What is the TG? The TG which we are focusing towards is nuclear family, a young couple with 1 or 2 small kids who are tech friendly, who understand quality, who believe in buying a better high hygienic product, and they also don't understand what is quality. So for them, they need a trusted source, because they don't know what to buy, where to buy from. Customers like you who are very conscious or connoisseurs of certain specific fish or a particular type, will probably may not be our customer. We are only focusing towards high disposable young professionals who are not aware of what they want, and we bring them a standardized quality. And seafood in one market is not that important, in another market is very important. So for us in NCR, as I stated, this is not a seafood market. When we move to west and south, we will be solving that problem. And as you can see, I don't know if you were able to see the screen when I shared. With the help of technology, we will be able to check. So I know the freshness of the fish is checked through the eyes of the fish. So this technology, we click the picture of the eye and tell you how fresh the fish is. So that's one thing which we will be working towards, but it will be more relevant for us once we launch these seafood oriented markets. But again, I'm saying that for people who are 50 years above, grandparents and parents are buying, those are not our target audience. Our target audience are young customers who are cooking at home, who are staying on their own and away from family. That's how it is.
Okay, so I just like to do a follow-up question, that how many customers you have currently, means you have served, just approximate.
We have about 300,000 registered customers.
Mm-hmm. Okay, thank you so much.
So Deepak, my question is, I'm just curious to understand, it has been 7 years of your launch and you are just working based out of NCR, Delhi. So is there any fundamental shift in the strategy from 2015 till now?
Yeah.
You were trying to stabilize?
Absolutely. So we started as an omni-channel player where we used to sell it to restaurants and hotels also. So till the COVID, so from 2015 to 2020, we were selling to B2B as well and B2C as well. 40% of our revenues used to be coming from hotels and restaurants, which have completely gone. We have completely dropped that channel, mainly because of COVID. And then when we realized that it's not, something which we want to focus on. So as of date, we are completely D2C, whereas earlier we were doing B2B as well. So that was one of the reasons where we were engrossed in one geography, because if you combine both the markets, the overall size of the market and the opportunity became more dense and more depth was there. But when you look at one distribution strategy, which is online, then you have to have more width in new cities. So that's broadly, what the change has been.
Okay, just a follow up on that. Is there any reason why you have chosen B2C over B2B?
Yes. So B2B is something which, we believe is a low margin, business, and B2C is high margin. So we wanted to be in the high margin business.
Dipanshu, but you get more revenues from B2B, right? Consistent revenues.
But for us, bottom line has been more important, Sai, and that's how we are going to be moving forward as we build our business. We don't really, are very conscious about our top line. Top line will grow at a certain level. We know that because that organic shift is happening in the industry. So people are looking and conscious of quality. They will buy if we give them the right product at the right price. There is no dearth of that. The important part is to be optimized, and growing the business profitably is what we have been focusing on till date. And that is going to be the focus.
Great, Dipanshu. Thanks.
So who's asking the next question? Do we have any more questions?
Yeah, I am having a question from Dipanshu.
Sure.
Hi, Dipanshu.
Hi.
Hi, Dipanshu. Samir this side from UClick. So
Hi, Samir. Love you.
I'm good. Hoping same for you, right?
Yeah, all good.
All good. Okay. So Dipanshu, if you will compare your B2B business and B2C business, so you have done good in B2B segment. So if you will see the profit, so what sort of margin you are having from B2B segment?
No, we are not doing B2B, Samir. We used to do B2B before COVID, but after that, we are not doing B2B at all. The focus is only in online and nothing else.
And if you will talk about the other states and cities, so what's your roadmap for next 3 years?
Next year?
Next 3 years.
Next 3 years. Okay. So in the first 2 years, we'll be launching 4 cities. And the third year is when we will focus on scaling those 4 new markets, and also be launching new satellite towns along with that.
Oh, great, great. Actually, I have seen a lot of customers having good word for you. So I wish you all the best.
Thank you, Samir. Appreciate it.
Thank you.
Thank you, Dipanshu, for answering all the questions patiently. So it's time to close.
Thank you.
Thank you, everyone, for joining in. Thank you, Dipanshu. Thank you, everyone.
Thanks.
Take care. So there will be a commitment form uploaded at the same page where you have registered. You can fill up and our team will contact you. Thank you so much.
Thank you.